Hey guys, how are you? I did an item on US indices highlighting how US indices can still go higher and may eventually have a blow-off top, which will then lead to potentially some downside, but why the US can go higher. Also, we had a target for Apple at through $300. And we expect that to happen as well. And many people wonder, and the question I'm really going to address is more an economic one than discussing US indices, but they are related. Many people ask themselves and say, where's the inflation? You say QE is coming, and where's the inflation? Where's all these inflationists? They say there's inflation, etc., etc. There's no inflation. We're doing QE. It's all still below 2%. You know, in all these first world countries, it's below 2%. Here, it's below 2% there. It's only 1.7. We'll keep printing until we make the 2% target. Well, it's an absolute nonsense. It's a license for the central banks to accelerate the game and take us to the point where we get a debt-based collapse. There is absolutely no trust to be had, first of all. So there's a number of points on this that must be made, first of all. There's no trust to be had at all in the official statistics that come out. In other words, toilet rolls are getting shorter, packaging is getting smaller, a whole bunch of items are happening. There's manipulation there. But even still, people will say, well, you can only manipulate so far. Where's the inflation? Well, the bulk of the money that is being released and created is being driven not to the men in the street and the people in the street, but it's actually finding its way into institutions and to a degree to high net worth individuals. Here's an example. Was the best place to be invested last year the Venezuelan stock market? Is that it? It's up 4,963%. Who wouldn't want to be in a stock market up 4,963%? Well, many of you are going, I know why. The currency fell to pot. The currency lost all its value, printing, losing value, etc. And the provision of further currency has led to this inflation. So companies that have a certain valuation, provide services, continue to move up with the devaluation of the currency, even though the country's prospects are not looking great. They will still do business, they will still do things. Prices will just go up according to the amount of money that's being proliferated. So now let's turn to America and look at our indices, and people say, where is the inflation? Well, inflation is not price increases to the man in the street. Inflation directly is an increase in money supply, full stop. The repo rate, provision of liquidity is inflation. Quantitative easing 1, 2, and 3 is inflation. The question is, where does the money that they've created, if you double the amount of currency available, you've halved the buying power for everybody. Simple as that. But who's been getting that second half of currency that you create? And what's actually happened is they've created pockets, niches, rooms that benefit, while the mainstream and the big lounge, the open, the big tent is getting none of the largesse. So what's happening is that money is finding its way into an environment where it is getting with institutions and high net worth people. Now, when that happens, what actually that causes is that those wealthy people park it in a place where it's least likely to lose value in an inflationary environment, aka the stock market. So immense climbs in the stock market in an economy that is soft and weak, with weak prospects and a major debt overhang and a coming to the end of a debt financially based system, is not a sign of a healthy economy at all. It's a sign of an inflation in a proliferation of currency economy where the smartest men in the room, supposedly, and I don't like calling them elites because they're not elites, it's not encouraging, it's a cabal, it's a cartel, and it's the banking institutions and the big corporations have the game and the access to near free money. Well, they park it up in institutions, listed institutions, equities, and they drive asset prices ever higher. You've got to remember, you've got negative yield in bonds because we've created so much damn debt we can't afford to pay the interest on them. So we've got to manage the interest rates ridiculously low. There's a dearth of supply. Everyone's creating new money in all forms. The base currency of the world, the dollar, we're creating new money with repo QE, which apparently is not QE, only it's QE. And all of this is happening, and everyone's going, well, the prices haven't gone doolally, and we're doing a whole bunch of printing. Well, apart from the lie that I've already referred to, in actual fact, you're not getting access to that money. That access is being granted. You go and spend on your credit card, you'll still be paying 14%, 16%, some people 30%, 29% on discretionary purchases. Corporation X borrows for next to nothing and can buy a stock that is giving a dividend yield equivalent to its borrowing cost or higher. Well, it's a no-brainer. To use an American phrase, you just keep buying the asset class. And money will lose value. And what happens when they continue and further degrees of QE will occur? You keep parking money in the thing that will hold its value. If you SAB and you sell beer, people are still going to be drinking beer. Therefore, if the currency gets halved, your share price goes up twice as much, unless there's a significant fall in the amount of people drinking beer. In fact, in the case of Coca-Cola, we've actually seen exactly that. We've seen a decline in revenues, a decline in profitability at an escalating rate, and a decline in market share, and an increase in debt put on balance sheets over a decade. So if you compare Coca-Cola 10 years ago and Coca-Cola today, guess what? The stock price is 2.5 times what it was 10 years ago. Wow. So that is, as the corporation's quality is actually going down, what people are prepared to pay for the only final last decent parking place for all this liquidity is now the equity markets. And this has driven ever higher ridiculous PE ratios. That's not to say it won't correct at some point. Of course it will. It will crash and correct. But before that happens, the whole printing game has to end. During the period that the QE and the bankers are continuing to proliferate and create debt, indices will continue to climb. And they're overvalued, and a crash will come. But the problem is, it could be a lot longer than you realize, and it can go a lot higher in between. So is it a case of hold your nose and buy, or stay out of it and just sit for the crash? Well, people have been waiting for a crash for a long, long time. And during that period, the US market has gone higher. And if the dollar milkshake theory is correct, all that dollar debt is going to see people looking for safe places to park money that needs to be in dollars, because all the periphery countries that have dollar debt will start failing when we get to reset. Well, you're going to see higher still. Maybe it's something you average cost your way in. The control structure shares. Should you be owning them? The absolute bastards. I call it the fuck you portfolio. Do you buy the military industrial complex, Lockheed Martin, Google, Alphabet, the surveillance states? Amazon is doing 46% online sales. It could go to 64% in the next 10 years. Imagine the amount of money these guys are going to be making as the largest retailer globally. What about Warren, you say? Antitrust, breaking up the oligarchical corporations. Well, in actual fact, if you study the original breakup antitrust on the Rockefeller family, their wealth went up more than 2.5 times on the breakup. They still owned everything. They just owned pieces here, pieces there. And in fact, it unlocked a great deal of conglomerate-based valuation that was lost in the larger conglomeration of being the whole market. Anyway, those are my thoughts on inflation. You think there's no inflation? There is inflation. There's asset inflation. There's equity inflation. And it's beyond the realms of normal valuation. Why is it there? Because they're printing so much goddamn money. Just because they've got the inflation rate of 1.7 or 1.8 and their target is 2, which is a ridiculous degree of accuracy on something that is incredibly vague and broadly inaccurate anyway as a measure, doesn't give them a license to keep printing more money. This is a fake charade, and everyone puts it down to incompetence. Oh, they're incompetent, they don't understand. That makes them, the commentator who's calling them incompetent, seem smart. No, maybe the whole game is far smarter than you realize, and the intent is exactly what they're doing, and they look and they pretend like they're incompetent and they think that's it. The game is to chip the table so that all the chips slide to one end of the table. They aren't working for you. They're pretending to work for you and being incompetent. Maybe they are achieving exactly what they are supposed to do. Maybe Trump is meant to be an antagonist. Powell and all the Fed chairmen before him were there, designed to create the liquidity boom, so that they could bring on the bust, and so that they could push all the asset prices up and know the timing of the game and know which stepping stone to be jumping on, when it would rise and when it would sink. Maybe that's it. I'm always frustrated by these very smart commentators. Many of them, I've watched many, from whether it's the Real Vision channel to all these other people, and the Fed doesn't realize this and the Fed doesn't realize that. Trust me, the people who are pulling their strings realize far more than you think. You're trying to be superior intellectually. The game is to create a two-tier economic system, one for them and one for you. That has always been the game. Why can't you see the intent in that? Call me a conspiracy theorist. You've got to understand the game and play their game. Maybe you need to hold your nose, average cost into the equity market, and you'll make quite a bit in on it. But don't see it ever as value. Its day will come for a revaluation, and we could have decades and decades of stock markets sliding, much like the Japanese did after their near 40,000 run on the Nikkei. So those are my thoughts on indices. Yes, they can go higher. Yes, they will blow off higher. During the blow off will be the time to sell into the dumb money who can't bear not to be in anymore. And it will be inflationary that it happens. It's asset inflation, and it's driven by the central banker cartel further enriching, and they will be unloading into those highs, buying derivatives to protect themselves, and handing over the bag of the bankruptcy to the taxpayer when it all happens. And it's designed that way. It's not incompetence. Okay, if you want to learn more and get our trades on what we're going to be doing, click the link below. Come and join us. Book a call. Come and see us. Grab the mini series if you haven't already done so. Have a chat with us about how we think this is going to be one of our best trading years in the markets, and how we'd intend to exploit it, be part of a community, have your setups assessed, and grow and learn with us. If that sounds right, you like our understand what we're about, please book a call. There's no obligation, and I'll catch you on the other side. Have a very, very happy, successful, awesome run into your new year, and wishing you the best for 2020. I will see you on the other side. Enjoy yourselves. Bye for now.